Hi, Stuart Bruce here, and I am the Spare Time Property Investor. In these podcasts, I'm going to share tips, tricks and lessons that I've learned and will hopefully help you, especially if you're still working the 9 to 5. Hello and welcome to another episode of the Spare Time Property Investor podcast. This week is the Power Team week, so I've got 3 episodes for you. I interview a mortgage broker, an accountant who specialises in property, and a solicitor who specialises in property. And the idea is once you've listened or watched these episodes, you'll know what to watch out for and what questions to ask to make sure you're getting the right people to help you move your property investment along. So in this episode, I interview Sam Norris, a really experienced mortgage broker who's going to tell us about him and what he does. He's a very holistic mortgage broker who also helps people kind of think about the longer term aims and goals they have and how he can help them work towards them. But he also shares, what to look out for the mortgage broker you might be looking for. So if you're looking for somebody to help you find a mortgage at the moment, this episode is going to be great for you. If you find these episodes helpful, I'd really appreciate it if you could share them on your social media, give me 5 stars or subscribe to the podcast. It just helps me reach more people. So without wanting to waste any more time, here is my interview with Sam Norris. So thanks again, Sam, for coming on to the podcast. First off, it would be great if you could tell me a little bit more about you and your background as a mortgage broker.
Yeah, Stuart, thanks ever so much for having me on. I'm really excited for this. So my name's Sam Norris. I've been a broker. I've been in the property finance industry, I should say, for 13 years now. Having passed my exams back in 2007, I think it was. But now, fast forward, I am now owner and director of Grand Union Finance. We're a specialist property finance brokerage, just focusing on investors and developers primarily. So we certainly do all of the kind of the weird and wonderful stuff, should we say. If you want a residential mortgage, we might not be the best people for you. But if you need some bridging finance or some direction on how to get into development or commercial even, then we're the people for you. So yeah, it's a little bit of mini background on me.
Cool. Okay. So when you're saying, so you focus on investment and helping people to structure those. So do you kind of, because of that, do you steer clear of all the kind of normal bog standard resi, leave that to other people to get on with, or do you just kind of put more of your time into investment properties?
Yeah, no, not at all. We're doing a few residential mortgages as we speak, but they seem to be either people that do have really complicated circumstances, or they're our investor clients that just ring us and go, "Oh, Sam, by the way, my main residence needs remortgaging. Can you just sort that out?"
Okay.
Just go, "Yeah, no problem at all." We don't really kind of advertise or market ourselves as the residential mortgage brokerage. In fact, our tagline is property finance for property professionals. That's what we focus on, and I think the importance of that is that we understand the strategies. We've got so many clients, and some of which are exceptionally successful property business people.
Mm-hmm.
And so by understand the goals, the dreams, the ambitions, the strategies, and how people manage their property businesses. And those are the kinds of things that we can impart onto, developers, investors that are just starting out. So although we don't charge for the service, we tend to almost be sort of half property consultants as well, in a way, because to give you the example, I was speaking to somebody this morning, and we were just talking about his initial working capital, which I didn't believe was going to be enough for him he could probably get his first property under his belt, but in terms of recycling some of that cash using kind of a buy, refurbish, refinance model, the second property was going to be really difficult because the working capital would have dwindled too much. So I suggested that maybe he looks at flipping some properties first. So number one, he gets to learn the trade, but he gets to build that working capital a little bit. And so I don't know many other brokers that would stick their neck out and sort of make that kind of give that kind of advice. But we're quite holistic in what we do, I suppose.
I was just going to say, I can't remember a time when I've spoken to a broker and they've been as kind of hands-on in a way in terms of like the strategy, best way to move forward, and as active, because a lot of the time it's almost like I'd like a product and then they go off and say, well, here's 2 it's your choice between those two. And then that's kind of the end of the conversation, really. But that's great that you have that experience and you're happy to kind of impart
Well,
that.
it's funny actually, because myself, well, me and my business partner work in a very different way. We together we've worked at companies together, we've worked at different companies apart over the years. And the one thing that we've found is actually two things. Is number one, you seem to get a lot, the thing you hear more than anything is, I can never get my broker on the phone. That's not necessarily the broker's fault. It's the industry is faulty. Brokers are given far too much to do. You wouldn't have one person in a factory building a car from scratch, but brokers are told that they need to find their clients, research for the clients, do all the paperwork, do all the application work, do all the admin, do the compliance at the back end, and do all that kind of stuff. You have more than about 5 clients, and you're buggered basically. Yeah. So what me and Ingi, my business partner, thought was, well, hang on a second. What if we were both involved in the conveyor belt and we actually had a part of this that we can work ourselves? So what you were talking about in terms of the transactional stuff, Engin takes care of that because his ability to research is insane. But what my job is to have conversations with a client, having that broker knowledge, having that broker background, and actually talking to them. And I use the word holistic a lot, thinking about the bigger picture, right? You've got these 3 properties. You've got this mortgage, this mortgage, this mortgage. You need to buy this property. How are we going to figure this out and actually come up with a plan? And then once we've got that plan, I can then go to England and say, right, mate, I need this mortgage on this property, this mortgage on this property, and this mortgage on this property, and I need you to find me some bridging for the 4th. And he will go and then research the individual transactions and almost acts like the calculator. He sits at his desk all day doing that, and then we work together. So I come up with the sort of the bigger plan, and then he will actually source the individual products that we need. And by hitting things, and we joke about, we use the term double team, which we know has a really weird connotation, but it's the best way we can think of to describe it. And that's kind of what we do. So all our clients get basically 2 for the price of 1, and our operations manager really then gets involved to sort of have a case home. She's a bit of a Rottweiler. She'll be on top of the lenders from day one. So essentially, she's a third point of contact. So all of our clients shouldn't have that issue of not being able to get someone on the phone, because they've got 3 people that they should be able to call through to, and all of us have access to the same system, the same information, and so everything is on that system, and we should all know how to do it. It's what we're trying to do. We're trying to build a new way of doing brokering because it is flawed, unfortunately. And it's not necessarily brokers' faults. It's the system, and we're trying to create a new one.
But also, like you're referring to about the analogy of building a car. Very few people have all of those different skills, the really analytical skills, the kind of, higher skill of looking at what the strategy should be and all that sort of thing. And zooming in and out all the time as well. I mean, that's a headache. So, it makes so much sense that you have those different kind of skills and you kind of focus on them to make sure that you're all doing what you're good at and keep on cracking on doing those things. It makes a lot of sense. I think it's a given that having a mortgage broker on your side when you're a property investor is a real benefit. But are there any benefits you think that people might not be aware of, or they just don't consider when they approach brokers?
Yeah, well, I mean, look, the obvious one is time. Like anyone that is wanting to invest, and they create this cheesy term, isn't it? But power team. It's because you can either learn what they do yourself and do it for yourself, and that includes anything from managing your property or giving it to a property manager, to doing your legals or learning legals yourself, which God, I would never do that in a million years. Investors could learn to be mortgage brokers. They could go and pass the test. They could physically do it. They could build themselves a team. Or, they could do that. But ultimately, a lot of it is down to time. I think broking, when you get into the sphere of what I'm doing now, experience is, a really, really important role. And because I've been, like I said, 13 years of doing this, I've seen a lot of stuff. And I like to consider myself a relatively intelligent guy. And so I can solve problems based on the experiences that I've had previously. So a lot of the time clients will come to me and say, I want this, and actually end up walking out the door with something completely different because I've been able to see an opportunity that maybe they won't see. There are lots of brokers out there that are very transactional, as we said. They will take instruction from their client almost to the letter, and they will say, right, you want a buy-to-let mortgage, I will get you a buy-to-let mortgage, even if the property is going to end up being an HMO. And they will just do that. But with me, I think the important thing is when you're finding a broker, actually find one that's experienced, find one that's been doing it. And even if you've got to pay them a little bit, God forbid you give a broker 500 quid to help you out, it's not a lot of money in the grand scheme of things. And to get somebody that really has an understanding of the market is something else. But obviously it goes without saying as well, you need to find a broker, especially if you're going to be an investor. You need to look at more specialist stuff that is, has access to the whole of the market, because the research element is the first point with a broker. What we need to do first and foremost is understand your circumstances and find you the right product based on the requirements that you've set. So we're looking at flexibility of lender. We're looking at, the lenders that actually we have the trust in to be able to complete the transaction, because sometimes, they'll say they'll do something and they'll end up not doing it. And we've encountered that many times. And I'm sure lots of investors listening have seen the same problem. And then the third thing, of course, is the price as well. We want to make sure that of the lenders that are going to lend to you under your circumstances, we want to find the cheapest. So that's like section one. That's the first stage. And that's what most people think that a broker is all about. And that's it. When actually that's just the starting point. What happens after that is, I believe, that a broker becomes a project manager for your transaction, for your purchase. We liaise with agents, we liaise with solicitors, we liaise with the underwriter, we liaise with surveyors sometimes as well. And we're there to manage that transaction from start to finish. We'll do your paperwork for you. We'll make either searching for more property or you're in a full-time job. And we will ultimately, if you find a good broker, we'll get you from A to B a lot quicker than you'd be able to do yourself. And I think that's a very undervalued part of having a broker on your team, is actually that project manager element. Yeah, do you know what? A lot of people can go out and find really good deals, but actually having the systems and processes in place after that to give you a really great service is the other part of that. So I think when looking for a broker, number one, look for one with experience, but take recommendations of other people that have had really good experiences with brokers that are looking to do a similar thing to what you're looking to do. Whatever kind of strategy it is, because different brokers will have different specializations in different things as well. And what you don't want to do is, if you want to be an investor that's going to follow, like I said, something like buy, refurbish, refinance, or they want to do commercial to residential conversions, there's no point, with the utmost respect to those that do this job, because I've done it myself previously, that sit maybe at the back of estate agents, they are probably not going to be able to help with those sorts of transactions. But if you want a residential mortgage as a first-time buyer, they're probably the best person to speak to.
Fine,
Exactly. So you've got to find the right broker that actually has the experience of helping people like you. And I must have to say, I think that's what stood us in really, really good stead over the last few years in particular, is that, because I understand this market, I can just get a camera in front of me and talk about property strategies and stick something up on YouTube or do a live video on Instagram or something like that, and actually give value to people, on this particular subject, on their strategy, how to fund their strategy. Because I've been there, done that, and well, I haven't got the T-shirt, because who wants a T-shirt that says mortgage broker on it? But I understand that, and so I can give that value, and then that hopefully, I know who knows. I mean, do you know what, joking aside, I have actually got a quote for some Grand Union Finance merch. I don't know whether that's actually going to ever come about, but I thought, if I've got a spare couple £100 sitting around, maybe we'll get some hoodies or something done, not to sell, just for us to wear in the office and stuff. Because I'm, as you can probably tell, people that are listening won't know, I can't stand wearing a suit. I hate a suit. So give me sort of T-shirt and jeans all day long.
Yeah, that's great. Apart from recommendations, then what else would you suggest that people look out for to make sure that they find a good broker for their strategy? Because obviously you're talking about
Yeah.
different things like bridging, HMOs, different serviced accommodation. There's lots of different things that different specialisms within brokering.
Well, there's nothing stopping you from talking to a couple of different brokers. The reason why I put myself quite a lot online is because I want people to actually get to know me a little bit more before maybe we have the conversation, because I know my style, my personality is not going to fit with everyone, but I know that it will with some. And so if I was a brand new investor, I would take to social media. I would look up a load of mortgage brokers and just get to know them by viewing and some of the content they're putting out there. And then if there's one in particular that resonates with you, maybe they're the person to go and have a chat with. I probably get about 3 or 4 messages on Instagram, for example, a day. People just saying, can I have a quick chat? I'm new to this, or I've got a particular project that I need some help with. And that's what I do. Most of my day is spent talking to these people. And if you do that, you reach out to these people, and then have a conversation, you can really get an understanding as to how you think you'd work together, because I think personality is really important. And whether you think they're a good fit for your team. And so, like I said, there's nothing stopping you talking to a couple of different brokers first. One thing I would say though is, don't muck a broker around. We're all human beings at the end of the day. And one of the biggest issues we face is we can do a lot of work and then not actually know that we're doubling up the work because another broker is doing the same thing at the same time. And ultimately, maybe that person might go and choose that other broker for whatever reason, it might be. And we've actually, to be honest with you, quite recently, even we have had a client say, I need you to help me with this commercial mortgage. We gave them better terms than the other broker did, but because the other broker wasn't charging a fee, he gave our research that we did to this other broker and then put the mortgage through them. That's fine,
Well, yeah.
The cheek of it, right?
Yeah, the cheek of it.
But it's speak to a couple of brokers, get to know them, get to understand what they're about, ask them about some of the cases that they've been working on recently, and you'll be able to weed out. You'll be able to see when they don't understand the jargon or they don't know the terminology and stuff like that. Maybe speak to 2 or 3, make a decision based on that, but then run with one. And if they do a great job for you, stick it out. If they do a crap job, you've always got maybe 2 in the bag that you've spoken to previously that are your plan B and C.
That's great. I particularly like the about getting onto social media as well, because now I think there's less and less places for kind of people to hide in a way, if you know what I mean. Because like when you're on social media, you're posting a lot. It's difficult to kind of be somebody else. You know what I mean? It's difficult to act differently to how you are naturally. So it is a really, really valuable tool, I think, these days to be able to go on to people.
Well, it's funny actually, because you say you can't hide from like who you are. The amount of times that I get replies to my stories on Instagram from my wife saying, could have brushed your hair, Sam. because I don't think about that. I don't necessarily think, I need to make sure that my hair is looking perfect. You're lucky, you don't have to worry about that. And I just sort of just get my phone out, and if there's something that's happened that's interesting, I'm like, just got off the phone to this client. It's got this amazing case that we can to convert this property and do this, that, and the other. And I just like to share stuff with people. And you're right. You can't hide. But as I said, there are going to be people out there that, because I'm not sitting behind a desk with a shirt and tie on, talking monotone about figures, they'll be like, no, that's not the person for me. That's absolutely fine. Because there's loads of those out there, and they can go and find that. And this all comes back to that abundance mentality that I was talking to you about earlier. I don't concern myself with the clients that don't want to work with me. I concern myself with the clients that do.
I'm totally with you.
Because they're going to be enough.
I'm totally with you, and you've got to be with the people you're going to get on with and stuff like that. And it's it doesn't make sense to try and fit in with like what personality they want you to kind of
Well, do you know the worst thing about that is if you put on a persona and then somebody doesn't like that persona that you've put on, then they might have liked the real you, and you've completely buggered that up.
Absolutely, yeah. I'd be a terrible actor, so I wouldn't be any good at that sort of business. Cool. Okay. So one of the things that people really struggle with, I've struggled with this in the past as well, how slow the buying process is. So from your perspective, are there things that people can do to help, move things along? I don't know, the documentation they provide or whatever it might be, what is, anything that people can do?
Yeah, well, when I was a kid, I was a scout, and our motto was "Be prepared," and that has stayed with me my entire life, and it's exactly the same for this. Be proactive. There's far too many people out there that are just reactive to what happens throughout the buying process, and this goes for all the people that are in this transaction, from agents to brokers to surveyors to solicitors. Although I know a lot of amazing solicitors, are very, very fortunate. There are far too many, in my opinion, that are very reactive to the legal process, and brokers are the same. And what investors have got to do is they've got to ask the questions before they need to be asked. So if I'm speaking to a client, for example, I ask the tough questions, and you've got to be really open and honest with your broker, and give them the full story, warts and all, because then what the broker can do is they can actually preempt problems that may well occur throughout the process. And we often get a lot of clients, the feedback that we get is that we spend quite a lot of time pre-application, but it's only because what we would prefer to do is spend a couple of extra days on the research, or the packaging, and speaking to lenders and saying, right, the situation, we've got together all of the documents that are part of your standard packaging, but what else do you think that we're going to need? Because the process of getting from application to offer is often one of tennis back and forth with an underwriter. They ask for documents, we go and get it. They sit in a queue for 2-3 days to be seen again. They get seen, they come back to us, ask us for more stuff. And this is a familiar issue. What we try and do is actually alleviate that problem by thinking ahead and going, right, we know that the underwriter is going to ask for A, B, and C. So let's get that together and actually submit it with our application. We've spoken to them. They've actually already said as well, the chances are they're going to want to see X, Y, and Z. So let's just get X, Y, and Z together and submit it with the application. The ideal scenario is that an underwriter only has to look at the case twice. Once when they get the initial underwriting, which they sign off, and twice when they get the valuation report back and they sign that off. Because then what happens is it goes in a queue to be offered. Easy. This is obviously for mortgage purposes. And so if we can try and get as close to that process on every single application, then we've got a lot of very, very, very happy clients. It doesn't often happen exactly like that. There might be a little bit of back and forth with underwriters, but at least if you preempt at least some of it, you're saving quite a number of days throughout the process, and it can make such a big difference. It can be literally weeks difference from in the application to offer stage. So the answer to that question in terms of what people can do is to really push back on their broker to package the case, as we call it, as best they possibly can. Okay. Preempt any issues that can occur, run these issues through with their business development manager, an underwriter, a sales manager, whoever it's going to be is their contact at any particular lender, and really hammer home that you want to package this case first. You don't want to do that either. The underwriter wants to get a really nice, pretty case, rubber stamp it, and shift it through to the next stage. That's their ideal. So of course, that's their life easier.
Yeah, I was just going to say, anything to make their life easy is surely going to be, beneficial to everybody in the process. So yeah, it makes a lot of sense. That's great. That's a really good bit of advice. And I suppose it's knowing that you can speak to your broker about making sure that everything's packaged from day one, and considering all of the possible questions and things like that to make sure that it goes through as smoothly as possible.
And do you know what? It's incredible for me because I remember doing it. I don't profess to being the perfect broker from day one. For the first couple of years I was a broker, I was pretty poor, to be quite honest with you. But I learned from my mistakes, and one of the big ones was trusting what an online calculator said, or trusting what a search engine, because we use various different search software to sort of shortlist lenders, and unfortunately I do think there's far too many brokers that just think that that is the be all and end all. If you put in a load of details into a search software and it pulls out, like the Mortgage Works is going to be the cheapest lender for this particular client. Don't just send an illustration to a client. Get on the phone to the lender and say, this is the case. It sounds really simple, but I prefer just to run it past you. Or speak to a business development manager. Every single lender has a business development manager. We've got incredible relationships with ours. We go out for drinks sometimes with them, and because we know that we're going to need them. And so I can get on the phone, or we can get on the phone to a business development manager before we send an illustration out and say, hi, this is the case. We actually think it's really straightforward. However, there's this one unique point I want to run through with you. They go, yeah, great, fine. Actually, that's not going to be a problem because of X, Y, and Z. Or actually, I'm glad that you brought this to my attention because actually this is a problem and that we will decline this case on that basis. And that gets rid of the problem of having to then do what we call rebroking cases, because that's a massive waste of everyone's time. What we don't want to do is submit an application that we're not pretty certain is going to go through, and that's why we take a bit of extra time on the research as well, because we don't want to waste anyone's time by submitting an application that we don't truly believe is going to go through. So yeah, it's so important just to have those conversations. It doesn't take that much extra time. It's just it does add to the research time, but I think it's time well spent. To be honest,
you save a lot of time by doing it, by the sounds of it. So yeah, it makes a lot of sense.
Yeah.
Cool. Okay. So if somebody wanted to go straight into something like an HMO or a serviced accommodation, just so they can get their high cash flow, maybe they're thinking about leaving their job, for instance, but they don't have a track record of investing or even possibly even owning their own home. I hear of people wanting to do this. Our first investment property was an HMO ourselves, but what do you think are the kind of pitfalls to that? Things that people need to be aware of, difficulties getting the lending, that sort of thing.
Yeah, well, I one of the sort of mottos or taglines that I use a lot is you need patience in property. It's not an easy game. It's a long game. And I think the analogy that I use is when you're a kid or maybe I'm a bit older than you, but when I was a kid playing Super Mario, I didn't start on level 3. I started on level 1, and I had to beat the boss at the end in order to get to level 2, and then I had to beat another boss in order to get to level 3. And property's the same. You've got to earn your stripes, I think, and that's what lending criteria is there to show, is that you need to earn your stripes, and then you will have more options because you've got a track record, you've got experience. You can prove to a lender that you're worthy of moving up to this higher level, this more complicated strategy, because there's a lot of things that a new investor will learn just taking out their first buy-to-let mortgage, or just being a landlord for the first time, let alone having to worry about 6 rooms worth of people, and all the other complications that obviously you're very, very familiar with when it comes to those kind of things, or with serviced accommodation, having the high turnover of tenants effectively. So it's tricky. It can be done, but don't be surprised if the cheapest lender on the market doesn't want to lend to you. And actually what I say to clients is, if you ever want to leapfrog and you want to move up, life isn't easy, because if it was so easy to do that, then everyone would be doing it. But it is a shortcut. And there's a quote from a film that I used to like as a kid, which is, of course it's hard to do that. If it was easy, a shortcut wouldn't be called a shortcut. It would just be the way. It would just be the normal way to go. So if you're trying to take a shortcut and you're trying to move up that ladder a little bit quicker, you've got to anticipate that you're going to get some pushback from lenders. And so you have to create a better proposition. So a lot of the time, a lot of my clients, I must admit, we don't do a huge amount of acquisitions with mortgages. A lot of the time, they will be looking to purchase with either bridging development finance because they're looking to add value. When we do that, we've got to show, if there's no track record of doing that kind of stuff before, we have to utilize the experience of others. Having a contractor on board to do works for you. If you're doing, say, for example, we get quite a lot. I'd say one of our niches is sort of family home to HMO conversions. Okay. So you're converting a C3 property to a C4. You're installing the fire doors and all the other stuff. You know about all this. So a lot of the time they will be to purchase it with. Now, what you want is to be able to say to a lender, a bridging lender, all they care about is getting their money back at the end of the day. The exit strategy is the most important thing in the world. So you want to be able to prove that you can get that mortgage at the end to refinance. But they also then, the next most important thing is actually, are you going to be able to get it to the point where you can get that mortgage on it? So do you have the right team that actually has some experience in converting a family home to an HMO? If you don't have that, then why should a bridging lender put their risk their money on you? And you've got to think of it in that terminology. It sounds really harsh and it sounds really horrible, but I constantly say to my clients, think about what the lender is thinking. Think of it from their point of view. They're going to lend you some money. They've got to be pretty certain that they're going to get their money back plus the margin that they want. And so everything we do, we've got to try and create a profile or a proposition that is going to de-risk it from a lender's point of view. So, depending on the size of the project, if you're doing a relatively large project, maybe you're converting a house into 4 flats or something like that, spending an extra few £1,000s on getting a project manager in that has experience of managing those types of projects, it's such a small outlay in the grand scheme of things, because the difference in the quality of the finance that you're going to be able to achieve is going to be next level. Because if you're doing something like that and you've never done it before, you can turn around to a lender and say, well, to be honest with you, I'm just the money, I'm the one that's funding all of this, and I found it. I'm the sourcer and the money. The day to day, I'm going to have a call once a week with the project manager. I'm not going to be sticking a hard hat on and going on site. So from a lender's perspective, if they're comfortable with the project manager, then they're comfortable with the project. So that they're the kinds of things that I'd be thinking of. But going back to sort of your initial question, using that jumping straight into HMO, for example, or straight into SA as an example, and say we are just going to buy with a mortgage. Yeah, your mortgage lending is going to be restrictive. So this is where the figures become even more important. Don't be surprised if, for example, Stuart, obviously your experience. So the kind of mortgages you're going to get are going to be better than the kind of mortgage that a first-time investor is going to get if they're going straight into HMO. So if you buy exactly the same property as them, your margin will be better on that, because the cost of your funding will be lower. So don't get disheartened by that. Think, I'm going to buy this property anyway, as long as you're not losing money on it and you've got a decent margin, which is, you're just in case there's an issue, or you've got a void period or something, at least you're covered with a little bit of contingency. Even if it makes the same amount of money as a standard buy-to-let, for example, stick it on a 2-year. 2 years later, you've got the experience, refinance it on, the true income that you can get from that property. Again, it all comes back to patience. You've got to be patient. You can't have your cake and eat it, unfortunately. And so it's this realism that I think I struggle with sometimes with clients, because look, I'd love to give them the cheapest mortgage on the market. I'd love for all my clients to have 1% mortgages. I'd love it. To a degree, I think if it was that easy to get a mortgage, maybe I'd be out of a job. But I really would wish that I can give every single client the cheapest mortgage that is on the market. But the difference is, what people have to realise is funding is very, very bespoke and very particular to that one individual. And so what's available to somebody else may not be available to you. And when the question I get asked a lot is, well, you're telling me that I can only get a mortgage rate of 3.4%, but my friend down the road can get 2.3%. Why can he get that? Shouldn't I be able to get that? Well, number one, Mr. Client, he's not buying an HMO. Number two, it's in sole ownership, so he can get it with BM Solutions or something like that. It's a lot cheaper. And number three, he's only borrowing 60% loan to value. So and he's got experience. So it's all of those things rolled into one. A good broker, what they do is they give you the best option for your personal circumstances. So the advice I would say for those that want to try and sort of leapfrog is, don't be disconcerted if you can't have the absolute best funding on the market. You've got to be realistic with what you can actually achieve. You might have to take a hit, but it's not going to be forever. This is why you've got to have a long-term strategy. It's so imperative.
And it's just all part of the process as well. I mean, learning what to do, and also proving to the banks that you're trustworthy and you've got that experience, and building up the experience. And you'd expect it from any other industry. When you start a job, you're going to start off as, kind of an entry level, and then you kind of progress and get more experience, and you get paid more, and it's just a natural progression, isn't it? But yeah, no, that's great. Great
Exactly.
advice. Great advice about getting, like a project manager on board and things like that, to add that additional kind of credibility of the team, which is really, really interesting. Yeah, that's good.
Yeah.
I might pick your brains about that, actually.
Okay.
Okay, cool. So one of the other things that people, I think sometimes, especially with training courses and stuff like that, and just like the kind of the reason why some people get into property is getting out of the day job. And I think they get told a lot of the time, give it 6 months, a year or something like that, you'll be making, I don't know, 20 grand a month. You'll be, driving around in a Lamborghini, and you'll be able to quit the 9 to 5 and all that sort of business. So obviously this is a real drive for a lot of people, but considering, mortgageability and, all that side of it, the financing side of it, what do people need to consider before they jump ship, before they leave the 9 to 5?
Well, I mean, funny enough, and it's becoming, I'm so glad, don't give up your day job. Many people during COVID, because the problem is that, yeah, you're totally right. These training courses, and bearing in mind, look, I'm not a hater of training courses. I think there's a lot out there that have really bad reputations, and I hear stuff that really boils my blood with certain stuff that I hear from these things. But ultimately, as I've said this before, property is not a short-term solution. It's a long-term, change to your lifestyle. And the thing is, and this is funny actually, because one of the things that I see that is a huge differentiator between my clients that are not as successful and struggle and get depressed and see setbacks in everywhere, wherever they look, to the ones that are so successful, is actually this idea of patience. A lot of these courses will teach you to reach financial freedom. They'll say, work out what your margin's going to be, work out your financial freedom figure, then you can work out how many properties you need to buy to reach the £2,500 a month you need to be financially free. But what they don't say is, then what? Because I don't know about you, but I don't want to be financially free. I want to be wealthy. I don't want to have to worry about money. There's a big difference. And the problem is there's far too many people that they see that 2,500 a month figure, their financial freedom figure, and they go, that's it then. I'm set for life. No, because are you happy with the life you currently have? No, you want a Lamborghini, and you want, a £1 million house, and you want a second home, in Monaco, or you want all these things. You want a season ticket to the corporate box at Arsenal. Whatever it is you dream of having, £2,500 doesn't get you that. Okay, it's your starting point. It gives you an element of independence that you wouldn't need to work. If you didn't want to work, you could keep your current lifestyle and wouldn't have to work. That for me is not what it's about. So the great investors that I've worked with have kept some form of other income in the background, either by way of a full-time or part-time job, or a business that they run themselves, and from a lending perspective that helps because we've got minimum income requirements. But actually from a property strategy perspective, the longer you can go without having to rely on your property income, the better. Because I'm a great believer in, and I've seen it happen so many times with my clients, where they reach this really incredible tipping point, and I'll even know when so many times I've actually been on the phone when the penny has dropped and they've realized this, is that a lot of my clients will run sort of a bit of a hybrid strategy anyway, where they will trade properties, i.e. they'll do flips on the one side, which generates cash for their investment company, which is why recently I did a post on Instagram, which is why I believe everyone should have 2 property companies, one to trade property and one to hold property. Okay. And their investment company, is buying these properties to maybe refurbish and refinance and hold, or maybe just their turnkey investments, so they're buying and holding straight away. And then what happens is you suddenly reach this moment where your investment company is making money, and it's also recycling the cash that the trading company is making through flipping properties. And suddenly you're reaching this point where you're like, hang on, this whole thing is just kind of working itself. It's just like this massive, ridiculous upward spiral that you continually just seem to have more and more and more money available to invest with. And it's at that point that you suddenly can turn around and go, actually, I can give up my day job now, or I can go part-time or whatever, because actually this property thing is working, because it's got to a point where it's big enough that I can take a salary from it, but it's not hindering the growth anymore. And I had a client that did this. Basically what they did was, they did have a full-time job. They actually quite enjoyed their job. But they were making, their first target was to get to £2,000 net income per month from their property portfolio, right? So they did that. And I said, well, what now? What's the plan? He said, I'm going to now get it to 4,000. I said, fine, okay. So he went off, he got it to 4,000. I said, right, now what? And he said, well, now what I'm going to do is my financial freedom figure, in inverted commas, was 2,000. So now what I'm going to do is I'm going to go part-time. So my financial freedom figure that I need from property is actually only 1,000, but I'm going to keep my job part-time. So it helps me with my mortgage applications. But I'm then going to take one out of the 4 that I get from my property portfolio per month. So now I'm in a much better position. I've got more time. Yeah. I'm still doing the job that I like part-time, but my property business is still getting a cash injection of £3,000 a month to enable it to grow. And I remember I had a conversation with this guy, this was about 5 years ago, and I was like, that's brilliant. This is proper investing. Yeah. You're thinking about things as an investor, not just I've been sold the goal by a property company that education company that I can get a yacht by the time I'm 25 and all this kind of crap. They're actually thinking about things properly and thinking long term and making decisions how I think cleverly. And that for me is what investors should be looking to do, is to be patient and stay off pulling income out of their investment company for as long as they possibly can, really.
Absolutely. No, I totally agree. I totally agree with that. And, I think, when I first started looking into property, I was thinking, it'd be great to quit work and stuff like that. But then the more I've gone on, it's like, I know I want to build something. I really want to build something. Cool. Okay. So we've got the last question. So this is, if you could speak to your 18-year-old self, what advice would you give to them?
Don't worry so much. Do you know what? It's because I say this to when I was younger, I've always had this weird thing inside me where I genuinely believed that, this is going to sound so pretentious, and I really don't mean it to. I genuinely believe that I was put on this earth to do something quite cool, and to make a difference in people's lives, and I didn't want to be a run-of-the-mill Joe Bloggs that went to work every day and just came home and then that was it, and got pissed in the pub and played rugby at the weekend. I needed something more than that, and I still have that drive in me today. But if I could go back and talk to that person, I would say, don't worry so much. Time is on your side. You're 18 years old. I'm now 36, and I've only just started my business. In that time, I've learned a ton, and I've enjoyed learning. There's been some hard times, really, really hard times. But don't worry so much. Everything happens for a reason, and you will get there if you work hard. And hopefully, that poor little 18-year-old Sam who's just about to go off to university and have the time of his life will probably turn around to me and go, shut up, old man.
Yeah, that's always the thing, isn't it? Yeah, absolutely. Yeah. Cool. Okay, that's great. Okay. Lovely. Thank you. That was a brilliant episode. I'm sure a lot of people get a huge amount of benefit from that. If people want to find you online or on social media, where's the best place for them to come and find you?
Yeah, I'm pretty much across all social media. So you can find me on Facebook, Sam Norris Property. You can find me on YouTube, Sam Norris, the Property Investors Broker, the longest URL in YouTube history. Instagram and Twitter, I'm both at the Sam Norris. Sam Norris was taken on both of those, so I'm going to track down that person eventually. I'm also on, what else? On LinkedIn as well. If you just search my name and then broker, I should come up there as well. And I do actually have a TikTok account, but I don't really use it. So don't worry about going on that.
Great. Okay. Well, cool. Thank you very much. And I'll see you again soon.
Thanks so much, Stuart. Really appreciate it.
Thank you so much for listening to my podcast, and I really hope you enjoyed it. If you have, please leave me a 5-star review to help other people find it, and don't forget to hit that subscribe button.